What is up, you guys? Pete DiCarlo here, and today we're going to talk about Theta Decay. I get a lot of questions from my private academy and my second channel community, traders helping traders, asking me about Theta Decay, implied volatility, and IV crush. So I wanted to put this video here on the main channel. Even though we normally only talk about long-term investing and wealth building on this channel, I still wanted to put this here because learning how to use Theta Decay to your advantage is one of the easiest ways to make passive income. If you haven't watched any of the videos that I've made on this channel called, selling puts for $11,000 a month income, or any of the other credit spread videos that I've made, you should go and check them out because selling puts is how Warren Buffett exponentially grew his net worth over the past 40 years. I'm not sure if he really still does it, but it is really one of the best ways to make passive income. And Theta Decay can be one of the biggest assets that you have in the stock market, even long term, or it can be the worst thing in the world and blow up your account, which unfortunately I've seen happen to a lot of people. So in this video, we're going to go over that. And we're also going to be making follow-up videos on implied volatility as well as implied volatility crush and how I use all of those to make consistent money in the market each and every single month. If you guys don't know me, my name's Pete DiCarlo. Welcome to the channel. I run an online investment education software company with over 900 members in our group. So I know what I'm talking about. I've been trading full-time for the past 8 years. And I want to explain in these videos about the stock market how you guys can make consistent income, because 90% of people who try to trade options end up failing. So that's why I'm here to kind of correct and help that. Now, I have some little notes right now that we're going to go through. And if you guys don't understand anything about options trading, go ahead and check out some of the videos I have here. I do have an introduction to the stock market course that is 100% free down below. I got nothing to sell you guys. And I also have a psychology course that's down below on trading in the stock market. Both those are completely free. I briefly talk about options in that, but there's a lot of good content if you go to the options section of this YouTube channel. But for those of you who are just wondering what Theta Decay is, or you're new to options trading, Theta Decay essentially is a poison drip to each and every option contract that you have. So these are the notes. We're going to go through them, and I'm going to show you some real life examples over here on Robinhood of how to use Theta Decay to your advantage. So decay is the reason many traders lose. Each and every single option that you guys buy that is out on the market, even if it expires 2 years from now, decays. That means that no matter what, as soon as you buy that trade, you're going to start losing money. Now, of course, if the stock ends up going up, we'll use something like Snapchat here. If the stock does end up going up, your gains should obviously offset the decay that you have. But even if you're making money, the contract itself is still losing money over time. And decay is the reason that many traders lose money. And we'll talk about like strike price and out of the money and what makes decay go up and down. But a lot of times people will actually be correct on the overall move, but things like high implied volatility will make the Theta Decay much higher, then crush the option. And even though the stock might go the way that they, intended it to go, they could still end up losing money, or best yet, basically end up even. And I want to show you guys, we'll get into it later, but essentially like how low of a chance you have of making money by trading options. So first thing, like I said, decay is the reason many traders lose money. The second thing is all options lose money. So like I said, all options end up decaying. Now, decay only happens with contracts because they expire. If there is a financial instrument such as like trading shares, shares do not lose money. Shares do not have a decay because those shares never expire. But if there's an expiration on anything like futures, Forex options, I don't even know if there are Forex options. I don't trade Forex, but if there are contracts for Forex, which I assume there might be in the future, if there are options on crypto, those will have decay. If there is a set time for something to expire, like I know with futures contracts and, obviously with stock contracts, options contracts, if that expires, it's going to have a decay on it no matter what. But for instance, shares, they don't decay and they have a delta of 100, which we'll talk about that when we get into like the actual options chain video later on. Now, the third thing, they lose every single day, but it's dependent upon the strike and how many days till expiration. So to give you an idea, the further out in time that you go, the lower the decay on the option will be. So let's say you're looking at Snapchat and you're looking to get, Snapchat's trading at $76 right now, and you're looking to go ahead and get some options. Let's go over here on Robinhood. I really don't like Robinhood, but I do use it to teach because the user interface is actually pretty good. So say you think that Snapchat's going to go up. And if we look here at Snapchat, right now it's trading at $76. So if we were to look at a $76 call, which, it's in the money right now, which means that the strike is below what the current price is, you can see that if we were to click this here, this is expiring September 10th. You have a theta, which you have to add 3 decimal points, of $21 per day. Now, the option is only worth $156 because all of these numbers are times 100. Like I said before, if you don't understand options, go and check the options playlist on here. I think one of the biggest videos I have on this channel actually is an options beginners video. So go and watch that. Now, like I said, this has a $21 a day decay. The option is only worth $150. So that means that if Snapchat doesn't move at all tomorrow, you are losing $21.73 no matter what. If the stock goes up and the option goes up, that's great. No matter what, tomorrow you're losing $21.73. It's just as soon as the market opens, that's going to end up happening throughout the day. By close tomorrow, you'll lose $21.73. Now you have to think that is roughly like 1/7 of that position. That's pretty sizable. Now, if we look at the same strike price, but a different date, so September 17th, and we're going to look at that $76 strike, you can see here that this is only going to decay at $11.59. Same exact strike, just an extra week added onto it. This is about half of the decay that we were going to have on that other option, but you have to think about it in percentage points. The other contract was only worth $150. This contract is worth $250. So an extra $100 and your theta decay is cut in half. What ends up happening, and we're going to talk about this later on, is that the closer to the date of expiration, the more parabolic the decay goes. So decay kind of runs like this, right? It's not that bad, it's not that bad, it's not that bad. And then as you get like 7 to 10 days away, it starts sloping. And then as you get like 3-4 days away from the contract expiration, the contract plummets. Theta decay goes through the roof. So it's not like it's a slow burn where like slowly your option's going down. It's like a slow move and then a massive drop. It's an exponential move as far as theta decay is considered. So you can see what I like to tell my students is take an extra 4 weeks if you're going to play straight up options. Give an extra 4 weeks to what you think. So if you think Snapchat's going to move to the upside within the next 2 weeks, instead of going with September 17th, go with something like an October 15th. It's going to give you a lot better time. So like I said before, go further out in time because the further till expiration, the less theta decay you have, and also go close to the strike price. You can see here that if we go back to those September 17th and we were looking at those $76 calls, the theta decay is $11.59. Now, if I go to September 17th, which is the same exact date, but instead I get something like a $100 call, that's a bad example. There's not enough volume. Let's do like an $82 call. It's an $8 theta decay. You might think to yourself, like $8, that's not bad. But look, you only have a $63 contract. So the percentages continue to move up. So for me, I always try to go with something at the money and or in the money. And I usually try to give myself an extra week than I really think. So remember that it's going to lose value no matter what. And the closer to the expiration, the faster it's going to decay. And like we said earlier too, the further out of the money, the faster it's going to decay. Now, implied volatility can greatly change the theta, and higher implied volatility can raise the premium price. And then when implied volatility drops, it can crush the price, which is called IV crush. That's what we're going to talk about probably next week. I might put a video out Friday on it, or next week. I have a lot of videos planned, but I wanted to get this theta video out now so that this way, when I do an IV crush video, which is a lot of people want me to do because it's based around a lot of my trading, this way you guys can go back. If you don't understand theta, you can watch this video. So that will come out. Now, the question is, why would you trade options? If it's going to decay, no matter what, why would you even trade these things? The reason people trade them is because of unlimited upside potential. So you can see here, if we're looking at, those September 17th, $76 calls, if I were to buy one, you can see here, max loss is $257. Let me make my face a little smaller. There you go. Max loss is $257. Max profit is unlimited. Now, guys, you got to realize unlimited hooks a lot of people because we live in an instant gratificational world to be quite honest, where a lot of people are just lazy. Like, just straight up. A lot of people are lazy and a lot of people don't have patience. So what they want to do is, instead of slowly growing their account over time, and I was like this too, they want to just instantly make a big return. And what I try to explain to you guys is, like, even if you had an extra 5 grand, 10 grand, 50 grand, it's not going to change your life. It's really not. Really focus aggressively on long term and having patience. That's the most important thing when it comes to trading. It really is. That's why I'm still here. Now, in the beginning, I was able to grow my portfolio from 5 grand to 50 grand because of just buying calls and buying puts. Then I lost 25 grand within a week because of the same reason. So the reason that attracts people to the options market is because of unlimited profits with ultimately a pretty low risk, 250 bucks. If Snapchat were to run to like $85 within a week, you would probably triple that $250, probably make $750. But what I want you guys to understand, whatever options chain you're looking at, you can look at what's called probability of out of the money. You might say like PROBOTM, which means probability that it will end up expiring worthless. So for instance, if we go and hit sell here and we go to that $76 call, right here it says chance of profit. Now this is if I'm selling it. Chance of profit is 66%. So if we reverse those numbers, that means that if you buy that, I'm sorry, $76 is 65% chance. If you were to buy a $76 call like we were talking about, you only have a 35% chance of making money. Does that sound like a good deal? A 35% chance of making money? I don't want to deal with that. I want something where I have like a 70 to 80% chance. Like, imagine that you were going to the casino and like you have 35% chance of making money. Are you going to take those odds? Like, that's pretty bad in my opinion. So for me, that's why I don't trade them, but it does draw a lot of people there because some people want to start investing and trading with like $200-300. That's not the way to go. The way to go is to do credit spreads, which I do have a video on this channel called How to Never Lose with Options. Go and watch that. That's a perfect video. I'll briefly speak about it here. So why would you trade options? Unlimited upside potential and dreams. Remember, there is an opposite side to all of this. And this is what I do, right? This is what I do, and I'll explain it now. And at the end of the day, you are playing a losing game. Like I said, if I said to you, guess what? I have a trading strategy where you're going to lose 70% of the time. Would you be like, okay, I'll do it? No, of course you're not. If you're going to only make money 30 to 35% of the time, that's your chances of profit. That is bad. That is a very bad way to trade. It should be opposite. You should be able to make money 70, 75, 80% of the time. And you can do that. But how? So we're going to talk about very briefly now. So as far as Theta Decay, that is it. You can buy straight up options, but like I said, if you're going to buy straight up options, and we're going to talk about selling options now, which is what I do. If you're going to buy straight up options, go at the money or slightly in the money, go 1 month further than you think you need, and run a tight stop loss, because one bad day can really screw you and you do not want to average your way down. Now, what we're going to talk about at this point is selling an option, which is what I do. Make money 75, 80% of the time. Usually I can pull 50 to 100% return every single year. And I only have to do this every single Monday. It takes me about 45 minutes. Like I said, I do run a private academy, so I do trade a lot more. If I didn't have that academy, I would really just be doing this and that's it. So like I said before, let's just look at a put. So everybody knows, and if you don't know, like I said, go back and watch those options. A put means you think the stock is going to go down. You think the stock's going to drop. So if you buy that put, and let's just say right now, like you think Snapchat's going to go down. If you were to buy a put for next Friday and you were to buy like, a $78 put right now, you could see here that you're going to have a Theta Decay of $11.20. Now, in this instance, let's look at a better example, actually. Let's say a 74.50. So a 74.50 is trading at 76. You can see here that your Theta Decay is going to be $10.81, and the option is worth $143. So you're losing about like you're losing about 10%, maybe like 7% each and every single day, even if the stock sits sideways. So that means that if I look at selling this, there's a 71% chance it's going to expire worthless, which means that the person who is buying that only has a 30% chance of making money. But like I said before, There is somebody on the other side of every single transaction and every single contract. So that means that if I'm buying this and I only have a 30% chance of making money, the person who is selling it to me has a 70% chance of making money. And that's what I want to do. And that's what I do. So I sell options to people that 7 to 8 times out of 10 expire completely worthless, and I take their money. Now, how do you do that? So let's use the example of Snapchat. Let's say I think Snapchat's going to move up within the next 2 weeks, which I do think it will. What you're going to want to do is pick a strike price that you believe the stock will not close below by next Friday. So we're here at September 17th and we're looking at puts, and I'm looking to sell a put. I believe it will not close below $74 by next Friday. So if you look at the $74 strike, you can see here there is a 73% chance that it will expire worthless, which means that me selling it, there's a 73% chance that I will make whatever I'm going to make, which we'll talk about. So if we look at this, the decay is $10.54. That means every single day that person loses $10.54. That money goes to you or me as the seller. So if I go ahead and sell this, I have to put up $7,531. And if it closes above $74 by next Friday, I will end up making $127, which is really good, right? I mean, I'm putting up 7,500 and I'll make 127, which is like a 1.4, 1.5% return each week. I'm completely cool with that, right? If you only have $1,000, that might not entice you because you're only going to make like, $100 every single month and a half. You really make like $14 a week. But what you have to understand is if you have $100,000, you're making $1,400 a week. If you have $300,000, you're making like $4,500 a week. You know what I mean? So it's all relative percentage wise to how much money that you have. And the way that you do this is by compounding that. So in this instance, I am actually making Theta Decay an asset instead of a liability. Now let's talk about worst case scenario, because anytime we're looking at investing, I want to know the worst case scenario. Best case scenario, like I said, is it closes over $74. Worst case scenario is it closes below $74. So let's say like next Friday, Snapchat closes at like $72.50. I still keep my $127, but I am forced to buy 100 shares of Snapchat at $74. So worst comes to worst, I end up buying shares in a company that I want to be in anyway. And going all the way back to the beginning, like I was saying, as far as Warren Buffett, this is how Warren Buffett made a lot of his money. It's how a lot of my mentors and a lot of my friends make a lot of money, because they'll find a company that they want to be in long term, like a Boeing. And let's say that you're watching Boeing and you're like, I really like Boeing long term, but I wouldn't buy Boeing at $214. I think Boeing's worth $210 or $200. What they do is each and every week, they just sell a $200 put. And as long as Boeing closes above $200, they just collect money passively, because you're not even doing anything. Just once a week, you press a button. Then if Boeing does dump 5-10%, they get to fill on shares that they were going to buy anyway. So using this, now that you understand Theta Decay, by selling cash secured puts and by doing put credit spreads and call credit spreads, which I've talked about in other videos before, go to the options section of the YouTube, you can actually use this decaying liability as a money-making asset. And that is what I do. And I'm telling you guys, like, I talk about it a lot, but like money, chimp, compound interest calc. I didn't even plan to do this, but this is like one of my favorite things to do. It's all about compounding. So like, let's say you have $5,000 today and you can't put any money into your account at all. But you can give it about, let's just say 15 years to grow. And you're able to make 1% return per week by selling cash secured puts. Like we just talked about, you have like an 80 to 85% chance of doing that. That means that you can make about 52% returns per year. Well, in 15 years, you'll have $2.67 million. Even if you could only pull a 30% or a 30% return each and every year, which is, less than 1%, you'd still have $255,000 in 15 years, guys. still really good off of 5 grand and never putting any more money into it. So that's the power of it. Now that you understand what Theta Decay is, you understand not only what it is, but how to use it as an asset. You guys are ready to take on the world, take on the market. If you want to learn more about this, like I said before, I have tons of free resources here on this channel. I also have Traders Helping Traders, which is like my daily trading channel, and then I have some free courses. And if you do want access to all the trades that I take, get access to our 60-hour course library, get access to basically like my private mentorship group. It's 100% for free the first month. I put it at the very end of these videos. This is a 20-minute long video. So if you are watching this, I want to extend it completely free to you guys. You got absolutely nothing to lose, everything to gain. And I put it at the very end because I know that the people who watch to the very end are legitimately serious about this. They want to make this an actual life for themselves and a skill that they master. I don't put it in the beginning because I don't want bums. Not bums like, poor, but like bums as in people who don't take this seriously within our group and within our academy and being cancerous to our community. But guys, I'll extend that 100% for free to you guys. Go ahead and check it out. Private Academy link down below. And comment down below what you think. I love to make videos off of what you guys want me to do. I feel like it's a great way for me to help you guys the best that I possibly can, because this is your channel and this is your community, and I thank you guys for it. Have a good day. Hit the like button, subscribe, and I'll see you later, guys. Peace.